sir.
All right. Now, I know you've known one or two things about price cycle, market structure, market going to the upward direction, and market going to the downward direction. All right. And I believe you know the concept of the market ranging or consolidating in a particular, how will I put it, in a particular phase. So now, if you want to learn how to trade, my goal is for you to learn from me. And if you wish, you can also be better than me. So that is why I don't just start jumping to just summarize or to go through the chart and to teach you or should throw you more light on what structure and liquidity is, type 1, type 2, liquidity, and the likes of them. My goal is to take you from scratch and to be able to explain one or two things for you so that you can understand. So tonight's class, we're gonna be continuing from where we stopped yesterday, but I'm going to start afresh because network really affected the class yesterday, and I believe you can still hear me.
I can
Now,
hear you, sir.
markets move in three phases or three directions. We have the upward trend, we have the downward trend, and we have the ranging markets. Today, we are going to look at the market moving in an upward direction. We are going to look at market moving in the downward direction. Look at market moving in the downward direction, and we are going to look at what is a break of structure. We are going to look at what is a change of character, how to identify a good change of character or a market shift. And also, we are going to look at what is liquidity sweep. Now, favor, to start with, we are going to look at market in an upward direction. Now, for market to move in an upward direction, it means price is creating a low, high, higher low, low, high, higher low, higher high, higher low, higher high, higher low. I'm going to stop at this point. Now, let me delete this. Now, and okay, let me leave this. We're going to stop at this. Now, please, you have your notes. I'm still going to drop the video for you. It's something you need to keep watching over and over again. Now, price is moving in downward direction. Now, ideally, price move in zigzag pattern, sweep liquidity, continue movement, and the likes of them. So now, for you to be able to validate that your price is moving in an upward direction, price always use your trend line. Why is it called trend line? I gave you an assignment to um set up your trading view in a such a way you add your favorite tool to your chart. With this, you will be able to easily pick them whenever you need them. Favor. If I'm very fast, tell me to slow down. You paid me to learn, and it will be at my best to give you the best you want. All right. Now, take it as if you don't know anything about market structure, right? But hearing and learning from me is just going to be a clarity. My goal is to bring you clarity to Forex market. Now, price move in an upward direction. Price creates a low, high, higher low, higher high. Now, for price to create an higher high, it means price break particular high. Now, and price came down again. Oh shit. Telling me that we are running out of time because I've been waiting for you for a long time, but never still. I'll drop a link after this class. Created an higher high, higher low, and you discover that at this point, price created another higher high. All right, and created another low, created another high, created another low, created another high. This is how price move. And for price to create an higher high, it means price must break structure. That is why I put this here. We are looking at market moving in an upward direction, and we are going to be looking at some small ingredients as price move to the upward direction. We have the low, high, higher high. Now, for price to create another high, it must break a structure. Now, for price to break this structure, then it means price is heading to create another high, and price is coming down. Now, what we have here, we have low. Please write this down. We have the impulsive phase. Impulsive phase. Discover that when price is pushing high, price push high with a large momentum, and we have the correctional phase. Once price is retracing back, when price is pulling back, we can call it a pullback phase, we can call it a correctional phase, and we can call it a reversal phase. So we have the impulsive phase, correctional phase, impulsive phase, correctional phase, which is also known as pullback, impulsive phase, correctional phase. Now, price coming back, price is doing what? Trying to get liquidity. We'll still come to that later in the future, but let's focus on market direction. We have a pullback, correctional phase, a pullback, correctional phase, a pullback, correctional phase. Now, as price is creating high, pulling back, and creating impulsive phase, price will create a break of structure. That's why I wrote break of structure here. So once price is creating an impulsive phase, as it's pulling back, for price to do what? Break this high. That scenario, it's called break of structure. Then we have a new high, right? And now price came down to create another low. And after the correctional phase, price break this higher high, then we have what we called break of structure. Then we have a new higher high. Now, let's stop at that. Now, we are going to look at another scenario. Ideally, discover that price has been respecting the trend line. Now, the trend line is to tell you that, oh, you are still in a good direction. You are still in a phase where you are still trending in line with the market. Now, there are some times that price will do something like this and come down. Whenever you notice this, it is called sweep of liquidity. Liquidity sweep. It means price is doing what? Trying to do what? Grab liquidity, taking this higher low as liquidity. Anytime you see that price came down, take away your higher low. I will repeat this like 3 times. Anytime price is respecting the trend line, take away your higher low. You keep watching. It could be a sweep of liquidity. If price is in an uptrend and price sweep your higher low, it is called liquidity sweep. That is, if price continue in its original direction and break another structure, then we see this as a liquidity sweep. Let's assume this one to come down and sweep this. It is called a liquidity sweep. We can't call that a change of character. It will be seen as a change of character when price continue in a new direction to the downward side. But as it is now, what we have here is a liquidity sweep. Let me return this back. What we have here, you may see that I'm using different color to illustrate this. We have high low, price came down to sweep liquidity, right? And continue breaking structure to the upper side. Then at this point, we have a new higher high, and coming here, we have a new lower low. Let me return it back. And price keep breaking structure to the upper side. Now, that is that about market moving in an upward direction. Now, I've talked about a break of structure on an upward trend. Now, there's this scenario where you discover that price will break your higher low and do what? So let me restore back my chart. So let me delete this. Now, in a scenario where price is in an upward trend, you discover that price has been respecting the trend line, right? Price has been respecting the trend line. And look at what price did using this red line. This line you are seeing in red. Now, price now break the trend line and do what? Sweep your higher low. It means it's a sign that price is trying to do what? Change direction. Now, a scenario where price do what? Break your higher low and never continue in the original direction and created low, lower high, lower low, lower high. We see this and call this as a change of character. That is, price has changed direction to the downward direction.
Trend.
All right, that is, price has changed trend. Now, for you to validate that price has changed direction is that price can do something like this and continue to break structure. But once price is unable to break your lower highs here and came down, stop somewhere here, and came down to break another structure, and this is now confirmed a change of character and not a liquidity sweep. I'm still going to explain this. I hope you understand.
Are you still there?
Yes, I just asked a question.
You say?
I said, anytime price do change of character, all right, sweep your higher low. It's not confirmed a change of character yet. Once it break another structure to the downward side, then this is confirmed a change of character. But if price sweep your higher low and continue in a new direction, the original direction, sorry, it is called a liquidity sweep. But when price do like this, come to this area and never move in the original direction, break another structure, it is called a change of character. And you discover that price will continue in the same way and do what? Break another structure to the downward side. You discover it's to confirm to you that price has changed direction. So now let's
I
talk.
don't understand this part that you teach now.
You did not understand.
And this explanation, like I don't understand this very well.
All right. I'm going to explain again. I explained something to you recently, less than 1 minute to go. So let me further explain to you. Now, I said earlier, price respect trend line and continue direction to the upward side. You may discover that I use another color to continue the structure to the upward trend. I said anytime price break your higher low, it's called a liquidity sweep. If price break your higher low and continue the original direction, it's called a liquidity sweep. Now, I now brought this trend line. As anytime price break your higher low now and break another structure to the downward side, it is seen as a change of character. This now become a change of character because price went ahead and break structure to the downward side. But in a scenario, for you to confirm that price has changed character, if price did not sweep your higher high here and stop somewhere here and come down again to break a structure,